Okay, this is a trade that I just got into, which is WSGP, which I have traded before. And I got into this trade first thing this morning, went to IB, put in a good to cancel order at 60, got filled at 61, this line right here, looking at getting about 10 cents down, so maybe 51. I have this line up here at 70 because I will average in to my position, which is what I usually like to do. Is a kind of every position I start is basically a starter position, especially with these shorts below $1. And if it goes up, I will average in, and that will move, of course, my average profit will either go up or it'll be easier to make whatever profit target I happen to have. Now, why did I get into this trade? Is if you look on this daily chart, which let's zoom out of this, you can see that we had this run up over here, this drop. This was a while ago. This was in May. And then we're just slowly fading. It's coming up and going down, coming up and going down. Major manipulators, the pumpers, and everybody like that is basically completely out of this stock. Nobody's paying attention to it, which is what I like. But I've traded this before, shorted it before, so I'm pretty consistent with it, pretty happy with what's going on. But the main thing and the main reason I wanted to make this video is this down here. If you look at this on level 2, you see this ask right here. See this 65 at ETRF? 15,000. Now 15,000 is not a huge number, but it does create the resistance of this coming up any higher, right? So we have at 65, we'll create a line right there, right? So 65 right there, this will have to come up and go through that 15,000 ask before it goes up to 66. And the reason I like this is because it was here after hours. So that means somebody, not for sure, but more than likely, this is a retailer. This is a normal person like me, like you, like anybody else. It's not a market maker. It's nothing huge. That's one of my texts. So why do I like that? That means that order was there overnight. That means somebody stuck that order in and said, okay, I want to get out at 65. So what that is somebody either they bought down here in the 50s and that's their target, they want to get out, or they bought up here in the 70s and they want to at least get 65. They're figuring they can get 65 to get out to cut their losses. But since I saw that there, everybody else sees that there, and they think, wow, that's probably not going to go all the way up there. So there's not going to be any volume. Nobody's going to be buying in between here, between 60 and 65. So that makes that kind of safe. Again, I do have a safety catch if it does break through there, and that would be a breakout. You know, if it gets up here to 70, you're looking at 75 being the top range, really. 75 probably, yeah, you're not going to get up. You're not going to get anywhere near $1. But, 75, I'd be okay if it went all the way up. I'd be okay if it went up to $1. I would average in every 20 cents afterwards and just keep increasing my position, which I would be okay with, because then that would just make it so much easier to make the money when it starts to drop. And it'll drop. It's dropped already, what, a penny? So, I'm already up on this 2 cents. So, nothing major. Depending on the price action, because the price action is, well, price action is kind of slow on it. It's very liquid. But the price action you see over here, again, on this side, level 2, and I spend a lot of time looking at level 2s, especially with these under $1 penny stocks. Over here, you don't really have any major support. It could just drop. I mean, you could drop. You've got 59, you got 1,000, 56, 55. To get to my order, you've got to go through what? 2, say that's 5, 6, 7, 10. Got to go through 10,000 shares to get to my order, right? Now, that might seem like a lot, but take a look, over here, you got 15,000 order above it, right? And if this is a retailer and they see this is coming down, they will start moving this down. So it's at 65 right now. So right now they might be looking at their screen and going, hey, I want to lower that to 64. I want to lower it to 60. Or you know what, let's get out now. And they might decide to sell all 15 and just hit the bid at 59 or hit something, get out. Now, if 15,000 were to sell right now, this thing would drop straight down, right? So really, you can see the range for the days. Usually this is, their range, about 5 cents. The last two, because I like this, was tight. They seem to be, bears and bulls seem to be fighting it out. They were trying to push it up. It just couldn't go up. It would come back down again, another tight range. Trying to go up, not making it for the day. Trying to go up, not making it for the day, coming down. So we're already red on the day. So that's pretty good. It's a pretty high or low risk trade for me. So I'm not looking at making a ton of money on it. I didn't go in really huge, again, because like I said, I like to start kind of with a small position. If it starts falling, I will either average in. I could average in again in here in the mid 50s if I see it falling very fast. And if I do that, I still will not change my exit, which is 51. I like trying to get out before 50. I use $1, from $1 to 50 cents, and then 50 cents down. So really, I could hold this until you see this down here in the 30s. Could hold it down to there, but I like to kind of guarantee and lock in my profits, not hold it for so long. So this might be really, technically, should be a 2 or 3 day trade. Granted, anything else drastic happens, but if it just keeps the fade going, which I think it will, as long as this guy hangs out, ETRF, we should be fine.